Hi, everybody. Good afternoon, good evening, and good morning, wherever you are. Thank you very much for joining the Boardroom Club today to our innovation conference featuring top tech companies across AI, analytics, cyber, fintech, quantum computing, CRM, and whatnot. My name is Yossi Garmazi, second year MBA here at Cornell, and I'm joined here also by a classmate and a good friend of mine, Alvaro Jimenez. Alvaro?
Happy to be here, Yossi.
Yeah, so today we are fortunate enough to interview none other than Shuly Galili, founding partner of UpWest, a pre-seed and seed venture capital firm that essentially has the largest portfolio of Israeli startup in the US. Upon their investment, Sentinel One, CyberX, Stamply, Honeybook, just to name a few. And yeah, thank you very much for joining us today, Shuly.
Thank you for having me. I'm excited to be here.
Yeah, we are as well. Surely, we thought to start maybe by asking you. I mean, you work with tons of Israeli entrepreneurs over the years. So I was just curious, before launching your VC, how was the Israeli industry and specifically the tech industry evolved over the years? And how is the Israeli entrepreneur mindset changed as well over the years?
Great, thanks. And thanks for the brief introduction of UpWest. I'm looking forward to dive into a little bit more of what we're doing. So we started UpWest in 2012. Prior to that, I was running the California-Israel Chamber of Commerce for 11 years, an industry association that was doing a lot of cross-border work between California and Israel. Really looking at the cutting edge technologies in Israel that could be serving California in many industries. So I would say a lot has changed since. So when I was starting out to kind of look at the ecosystem in Israel, the innovation, the kind of opportunities that were there, in the early 2000s, it was Israel was really kind of a landing pad for offshoring for a lot of big tech companies from all over the world, but primarily from the US. I was looking for talent, tech talent, looking to build, some of the best microprocessors and telecommunication solutions and enterprise software and all of that. That was the early 2000s, and there were, I would say, already some great founders out of Israel, but Israel was not looked at as startup nation yet. It was definitely branded over the years, and we've done a lot of work to make sure that people look at Israel not only as a source of talent, but also as a place where innovation happens, as a place where things could grow and grow big. So you asked me about the mindset and what has changed for Israeli founders from kind of the early 2000s till today. And I would say the main thing that I would point out is, for a lot of the founders that we meet today, the definition of success is different today than what it was in the early 2000s. And you could see it in the scale of companies that now come out of Israel. You can see it in how thoughtful the founders are about the market, and how they want to win categories and really lead categories and build, I would say, really big companies. And I think that is that's something that evolved over time. And in the early years, people were doing kind of a quick exits, and it was meaningful for the founders, but it was not meaningful enough for the ecosystem.
Amazing, and it seems like the Israeli entrepreneur mindset shifted from startup nation to scale up nation. So with that being said, I guess some of it is attributed to the VC, and of course, like as UpWest, I mean, yeah, you're giving them the money, maybe even the first check, but I know that UpWest is not only about the first check, right? So I read that you supported them throughout their journey from the get-go to, for example, develop their GTM. So I was just curious if you can maybe elaborate a little bit about this aspect of UpWest.
So UpWest is a seed and pre-seed fund. We write first check for Israeli founders in Israel and here in the US who are looking to build, as I said, category-defining companies, have huge vision, and want to change industries. Our check size is between 1 million to 3 million first check. And a lot of the things that we do is what every VC will tell you they do, right? Provide value, access to customers, market, offer governance as well. We sit on boards of our companies. We are very mindful of the fact that building a cross-border company is not very difficult, is not very easy. And for a lot of the founders who come out of Israel, there's no market in Israel, right? I mean, their market is in the US. They have to be global from day one. They have to think about how to scale the company outside of Israel from day one. And as a first check, first of all, we're very privileged to be first check in companies. I think it's the most impactful check. I think it's the most impactful work that we do to kind of join the journey so early and help founders navigate the most chaotic, part of their beginning, because a lot of things are not defined yet. The market is not completely defined. The go-to-market strategy is, there is some sense of it, but it hasn't been proven. The product is not built yet. So many things are not yet built. So what we do at such early days is I think so important and crucial for the companies. And I think the first check is the most important check because you build on top of it kind of like the next layer of where the company is heading. And first check investments come in all shapes and sizes, right? And so I'm only giving you kind of like the UpWest version, which is a seed fund version of the first check, but there are many other ways to kind of get your first check from angel investors and others. So we definitely provide a lot of value for the founders. We have a platform to bring resources to the founders in the early days. We spend a lot of time thinking through the markets and customers for the founders. And one of the things that I think UpWest is really unique is that it has an instant community of founders in the US that the companies can plug themselves into, and they're at all stages. Their growth, they're early, and they all have gone through the process of maintaining R&D in Israel, but growing the go-to-market team in the US. And how do you manage these two organizations is something that, they can learn from best practices of other founders that we backed over the last 13 years.
I agree. Indeed, the first check is the most crucial one, and also the hardest one as well. Just like to know how to assess the company. But before we go into that, let's say I'm a newly launched startup. What should I do before approaching a VC? And in your view, when is the right time actually to seek venture capital funding?
So I've had this conversation with so many people. And when is the right time to talk to first investors? We tell founders to talk to us when they're just thinking about leaving their jobs, actually. So we actually start talking to founders and very early. And it's not in the form of come pitch me your full deck and and company. It's more for a lot of that is, hey, I'm thinking of leaving and I want to start a company. I have a co-founder. And we have an idea, it's still early, but can we run it by you? And we absolutely will take the call, and we discuss with the founders their kind of early assumptions around what they want to build. But really, founders, first and foremost, they need to understand if they want to take venture money, if this is really the category that they would go for first check. And so before you go talk to VCs, you need to think, am I building a company that will be a venture-backed company? Meaning, is this a high velocity company that I'm planning to build for the next 10 years? Or is this just going to be a really nice tool or application that, you know, will make me good money and it will be a good business? Then I would say it's not fit for VCs. So you really need to think about the kind of first check you're taking on. Is this really something that will be interesting for VCs to take a look at? Number two, you need to talk to other founders before you go talk to VCs. Before you talk to VCs, talk to founders who've raised money, who talk to other VCs to understand, you know, who you should talk to and, you know, what process you should go through. And as I said before, you know, if you think you're ready and you understand this is the time for you to pitch VCs, you need to really get your story straight. And what I mean by story, I mean, you know, what validations you already have. Have you had early conversations with potential customers or the market? Do you understand really the dynamics there, who your competition is, and things like that? What's the story around the team? I think founders don't really spend time thinking about how they're going to pitch the team, because I spend probably majority of the time in my first call with founders on who they are, who is on your team, and what are they doing, where they come from, what's the background, how did you meet, why is it that you're going to be winning, because of early experiences you had, or, you know, unique perspective or unique tech abilities. Really figure out how to talk about your team. And then one of the things that I think a lot of founders lack in the early conversations with VCs is to really talk the long game, to really talk the long-term vision. Like, what do they want to be 5 years from now? It's something that you really need to think through. And in order to do that, you know, I would say, you know, really figure out who you want to be, what kind of company you want to build. And then finally do the research, you know, because, you know, VCs come in all shapes and sizes. Some of them invest early, some of them lead the round, some of them follow the round. So, you know, you need to know that early on. Also, do they even back your category? I mean, if you're a biotech company and you talk to VCs who only do, I don't know, enterprise software and fintech, then it's not the right category for you. Do they take board seats? Are they going to sit on the board? What kind of ownership do they typically take? So in order to know all that, you need to talk to other founders. But I would say come prepared for the meeting to even ask the questions from the VC you're talking to. Ask these questions. Do you lead rounds? Do you follow rounds? You know, what categories do you like to invest in? Give me an example of companies that you backed in my category. And also, you know, do you follow? Meaning, will you invest in my next round as well? Or this is the only round you will back me at?
I agree. I mean, at the end, your firm doing seed and pre-seed, and I guess most of the company that come into UpWest without any assets or maybe without any substantial ones. So how do you assess this company? How do you know like who is going to a chance to be successful later on?
So as I mentioned, before, we're super lucky that we get to invest that early. And as I mentioned, there is no product necessarily to look at, or revenues or customers. So we really spend a lot of time on the quality of the team, and is this the right team, and how do they come across, how do they make decisions, who are they, who's the CEO, who's the CTO, who's the tech lead here, and how long have they worked together in the past. I think that's super important, because a lot of times, it will tell us a lot about, can they get along, are they aligned on the same ambition, things like that. And then the other things that we look at, obviously, we're very market-driven investors, and it's super important for us that the founders are market-driven founders. So we understand that as a tech founder, you will be amazing in building that rocket to the moon, but how do you get there? And so understanding the market is something that we're going to spend a lot of time in our conversations with the founders, because have they researched it enough? Have they talked to customers in their target market to get validation of what they're trying to build? Where is that inherent motivation to solve that problem coming from? It's not that you wake up in the morning one day and say, hey, you know what? I think I want to solve supply chain. Why is it that you picked that particular problem to solve? And so we do a lot of work around the market and the team, with understanding that the product is, going to take shapes, over the years, and will change a lot. And I think the conversation around go-to-market is super important for us, and figure out that the founders, they gave it some thoughts, right? How are they going to reach the first milestones with the capital that they are raising, and things like that. So these two are definitely the most important things.
Amazing. And last question for myself before we move into Alvaro is that, I mean, looking at the list of company in your portfolio, you had an incredible success. Maybe the most famous one is SentinelOne, but not only. You had companies like CyberX, Stamply, Anybooks, and other. What was it working with all these successful company in the early days before they were as successful as they now?
Yeah, I mean, I think that no one has, an overnight success, and the journey is really long, as we know. When you decide to build a company, it's a marathon, it's not a sprint. You are in it for the long haul. And I think for all these founders, the early days were just like for other founders' early days, is trying to figure out, why would customers want, what you're building? And I think that for SentinelOne particularly, Tomer was so determined to reach the top CISOs in Silicon Valley and talk to them before he even went and built, the actual product, to really understand what are they using, where are the gaps. But I think that his vision in terms of building an AI solution for the endpoint never changed over the years, right? He wanted to be that category leading company that is, changing the game in that sector, and that was kind of his North Star in the story, in the narrative he was telling customers, and in the way that he was laser focused on building the company. And so, that's, the early days were definitely, I think, the same for a lot of the founders that we backed. And but you see really early signs of how founders take feedback, how founders, keep themselves focused, how they are striving to hire the best talent. And I think these are really important characteristics that we kind of follow early on with a lot of the CEOs that we work with.
Definitely, and very inspiring indeed. And we actually probably gonna have Tomer later on, so super excited for it. And yeah,
just so for the audience, we were the first check in Sentinel-1 in 2013, and in 2021, the company went public at a $10 billion valuation. And obviously that journey in between was really incredible, with a lot of highs and a lot of lows and a lot of side things that were going on. But we were so lucky and very fortunate and privileged to join that journey very early and see that through, and be there at the IPO, which was really exciting as well.
amazing. And yeah, Shuly, thank you very much for answering all my questions. I learned a lot, super inspiring. And Alvaro, without further ado, floor is yours.
Thanks, Yossi. So Shuly, this is really interesting. We talked with a lot of founders here at Cornell Tech and also at Gorgeous Ventures, and you've mentioned the difficulties to get that first check and the screening that you do. But it does seem that after getting that first check, after raising the money, that's when the startups face the challenge, and then they have to report to the board. Uh, can you tell us what are some of the common obstacles that founders face after securing a VC funding?
So I would say the way it looks for us, and I think that for a lot of first check investors, and as I mentioned, it's very chaotic times, the early days. And I would say when you raise your seed round, you have about 18 months to run and to prove something. And it's important that you have a sounding board, and it could be in the form of a formal board or people who are more experienced advisors. But it's important for a lot of founders to understand what they're trying to achieve with the capital and have clear goals that they track, or KPIs that they track on a weekly, monthly, and quarterly way. And we see that a lot of founders who send out a monthly report to their early investors are the founders who are like so focused, and it helps them a lot, because these updates are not for you as a founder, not for us as investor. It's for you as a founder to really make sure that you track, are you on the path, in terms of your revenues, or in terms of, the number of customers that you bringing in your pipeline, or, or converting. And having that, ongoing, conversation with somebody outside your organization sometimes really, really helps. So I think that the relationship with a board or with someone from outside is really critical. Now, we're not the kind of board that would meet you once a quarter and, look at your deck and say, do this, do that. I mean, this is your company. This is your journey. We're, again, as I said, we're along for the ride and offering insights that, we see from the market. And I think it's really critical for founders to get that feedback, to listen to someone. We have weekly conversations after we've invested with the CEOs or with the founders. We go on even 30 minutes weekly calls where we kind of tackle the things that top of mind for the founders. What's top of mind? What's the biggest challenge? What are we trying to accomplish this quarter? How are we going to be able to help with our relationships in order for you to get there. We interviewing the first employees sometimes that the founders are hiring. We're helping them understand, if they're launching or announcing funding, who to talk to, how to really tell that story. So we do a lot of work with them in the 18 months. And then obviously we help with raising the next round of capital with Series A, which is, I think, to get there, it's challenging, but there are certain steps that founders need to take in order to be Series A ready.
Okay, and so my next question is in relation to this, maybe before or after you actually write the first check. What would be a red flag or a deal breaker for you when you're evaluating a startup for a seed or pre-seed investment? Or let's say that you give them the pre-seed investment, but you're not sure about the next one.
I mentioned a lot about the team in our conversation. So a lot of times we see red flag would be, we're 5 founders. And, we were together in the army, or we were together at college, or, and we decided together to start a company. And number one, I think more than 3 founders, it's a bit too much. Also, when you look at the team, another red flag is, anything that is outside, what we're used to seeing. For instance, you have a COO in a company of 3 people. And I think that is unusual. And that person oftentimes role is undefined and, maybe bringing a lot of value, but we need to evaluate, why is this person a COO in a company that really needs a CTO, CEO, and maybe a product person. So sometimes, we kind of look at that and trying to understand the dynamics. Also, a lot of times the roles are not defined. And when you talk to the founders, you're like, how do you make decisions? Who's doing what? Because everyone's doing everything. A lot of times, it's conversations that sometimes come up when I go on a call with founders, and a red flag is that the CEO is barely talking and the CTO is, taking on himself or herself the entire pitch. And I'm thinking, why is the CEO so quiet and not talking? Are we having, any kind of dynamic issues between them? When there's no tech lead in a tech company, I see it as a red flag a lot of times. And then another red flag for me is that your validation of the problem and solution was done with your friends and not with the customer and your target market, right? So we see it a lot of times, Israeli founders that, they kind of building a dev tool or any kind of technology, and they test it on their friends who are in other companies around them, but they haven't really gone through the process of explaining it to a potential customer they found, through the network or online, and try to convince them, to talk to them. So for us, it's really a red flag that you have not gone through that process yet, and all your validation comes from, your friends, and that's something that I would look at. And finally, founders who are not aware of the market, that want to spend the entire conversation with me about the product, but not to talk about, how they're going to take it to market or the competition out there. Who are they, or why? A lot of times is like the why question is super important, and founders need to understand, like, why now is the right time for you to build this company. And it's a question that not a lot of people give enough thoughts to.
It's actually very interesting that you just mentioned that, because I was just thinking, you've talked about all of the companies that are and the talent that initially was in Israel that then has developed into a lot of innovation. And now we find ourselves in a moment where there's a lot of competition and getting up in there is really complicated. So considering that now it's a much more competitive environment, where would you say that there's industry verticals that you see as having the most potential for future founders?
I think that that's another thing that changed a lot in Israeli founders. And I forgot to mention that, by the way, is that traditionally Israeli founders were looking to solve, kind of traditional industries, microprocessors, cybersecurity, telecommunication, things that are, that you would expect would come out of Israel. And I think what we see is a lot of founders who are eager to solve problems in the world that are huge, and they are convinced that they can apply technology in order to change it, whether it's in healthcare, whether it's in food tech, and in I would say in fintech, various fintech layers of things, and obviously in manufacturing and more industrial side. I would say there is like endless things to solve in the world, and you need to really ask yourself, why is it that you're going to be the one solving that problem? Today with AI and robotics, we can do a lot of automation in a lot of industries and inject efficiency in these industries and save a lot of money, and that's something that I think we're right now in a very pivotal moment, where we can see a lot of solutions that will be very easy to build and a lot of solutions that we know very, very hard to build. And founders really need to think, when they are going after that, what's their defensibility? How are they going to compete, whether it's through technology or through certain unique access or unique insights from that particular industry, and therefore will allow you to take over, very quickly and build a moat. So there's a lot of things to solve today. I would say, you really need to find your path, but definitely think through about the competition and about how you build a really clear differentiation.
All right. So thank you. That was actually very interesting and a little bit of what my last set of questions were going to be, which is a little bit more on the personal side. And I had to ask you that if you had just one piece of advice for future entrepreneurs, what would you tell them?
Number one, I would tell them to understand that you're going into a long journey, and prepare yourself for that. And this is, again, as I said, this is not a sprint, it's a marathon. It could take you, 8 to 10 years, if not, 2 decades to really get where you want to get. And if you're ambitious, you'll be there that long. That means that you need to surround yourself with people who will run with you that marathon. And I think because being alone as somebody that runs a marathon, it's really difficult. So when you look around you, whether it's your co-founder, your life partner, advisors, employees, people that really understand that they're in it to really win the long vision. And I think that a lot of founders, it's an afterthought for them. And therefore, a lot of times there is misalignment between them and the co-founders in terms of how long can they really go through and build that long marathon. And sometimes it's okay, co-founders leave and you have other, big executives coming along the way. But I do think that you have to, for your mental health, you need to find the people that will support you in that journey and you need to have, you know, very healthy lifestyle in order to make sure that you sustain that.
It's all about the people and the lifestyle. Okay, so you must have had maybe one or more than one mentor that you always think about the lessons that they pass on to you. Can you tell us a little bit about who impacted you the most and why?
That's easy. So yes, you know, I had a lot of mentors along the way in various stages in my careers that I didn't call them mentors, but it was definitely people that I looked up to and was working alongside them or reported to them, or you know, they were on my board and things like that. I would say in the journey of UpWest, and as a in a journey and the industry that we are in, the venture industry, starting as an early investor was not very easy, because both Gil, my co-founder, and I we didn't come from venture, right? And we didn't go into building UpWest thinking that we want to be VCs. We actually wanted to solve the go-to-market problem for Israeli founders. That was our mission. And so it happened that we do it in the model of a micro fund and able to put small checks into companies at the early days. I was lucky looking at the industry around that there were people that spent time with me thinking about the long-term vision. Again, thinking about the long-term vision. And one particular person, his name is Liron Petrushka. Liron, a repeat founder. He sold his, you know, he took company public. He sold a bunch of companies, was very successful angel investor. And he was an early partner for us in the first couple of funds at UpWest. We got to sit with him in countless, you know, meetings with founders. And he did not see himself as a mentor to us, but I think his impact on how we carry ourselves today as investors stems a lot from working with him and watching him. And he was, you know, and the reason I say was is because unfortunately he was killed last year in a tragic plane accident. And I miss him every day. And I think about, you know, decisions I'm making every day about investments and thinking about Liron and what he would be saying or doing. So he's definitely one of, you know, I would say a mentor that made a huge impact on me in this business.
It sounds like it, and having these fond memories is at least something good that you get to
Yes.
take with you. So to finish this interview, well, you've been successful for many years now. What keeps you motivated?
I would say the founders that I get to talk to every day keep me motivated. Again, as I said, I feel very privileged to be doing what I'm doing and waking up in the morning and going on calls with founders who want to change the world and want to solve problems. And I think that is a very motivational reason for me to keep doing this.
And last question. You really like this job, but if you had any other chance of doing anything else, what would it be?
I think what I'm doing right now is really where I would, you know, want to be. I think that, you know, I've been doing, I don't see it as a job, number one. I think I see it as, you know, as definitely as a mission to help people, you know, accomplish what they want to accomplish as they build companies. Early in the career, I thought I will be doing advocacy work in some international NGOs and changing, you know, how people think about the environment and other social issues. But I feel like I'm contributing, you know, in a different way.
It's so much fun that you wouldn't be doing anything else. This is the hardest question of all the interview. Shuly, thank you so much. It was really nice. Yossi,
Oh,
back
you
to you.
asked me about a book, which I wanted to recommend.
Ah,
Oh,
would you have any book
I
or any
do.
movie? Yeah.
I'm doing a shameless plug for a book that I didn't write. It was written by a very, very good friend of mine, Jacques Benkowski. Jacques is a venture capitalist at a fund called US Venture Partners. And he wrote a book about market access and go-to-market strategies for founders. And it's actually going in Amazon next week. But I had the privilege of working with Jacques for many, many years, and he has a very, I think, important insights from his experience talking about go-to-market with a lot of CEOs and founders. So I think for your audience, that would be an incredible book to look at. And you can find it today at jacquesbenkowski.com. You know, I'm happy to send it to you later and you can plug it in. But that's a book that, you know, I'm really excited to recommend to many founders that I work with.
In all of our audience, maybe half of them are entrepreneurs, so I'm sure that they'll be looking after it. Thank you so much, Shuly.
Yeah, so Shuly, thank you very much again for all your time and just like sharing with us all your experience. Super appreciated, and we learned a lot.
Thank you.
And yeah, and for all the other people in that watching it later on, so stay tuned for the next episodes. We have the founder and CEOs of Sierra. We have also the CTO of Ireland, a bunch of others companies like AppsFlyer, one of the founder of Payoneer, chairman of Wix, and yeah, it's gonna be
Wow.
yeah, it's gonna be a good trip. So we are looking forward to it, and we are super fortunate that you decided to trust us and give us and share with us your time. So super appreciated again.
Thank you. Thank you for having me.